D Street opens lower but quickly comes off the day's low, even as global markets continue to react to Trump's tariffs on China, Mexico and Canada. That come into effect today. The Sensex and the Nifty recover from the day's low to trade flat. Mid-caps outperform.
Bottom beverages climbs about 3% as CLSA upgrades the stock to a high conviction outperform, citing the company's risk-reward being compelling despite assuming competition impact of 4 to 5% on their earnings.
Ask Automotive rallies 5% after the company signs a tech assistance and license agreement with the Japanese company. The stock is up 5%.
Jupiter Wagons rises more than 5%. The subsidiary of the company, Jupiter Electric Mobility, announces the launch of its first commercial vehicle, electric vehicle, that is. The management tells CNBC-TV18 it will start rolling out to dealers within this month itself. Good morning, you're watching us here on Chartbusters on CNBC-TV18. I'm Manglam Malu. With me as always, Nigel D'Souza. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. It's an interesting trading session. You know, we've seen drubbing over the last few weeks, and now it seems like maybe the process of bottom formation is on for the market. It hasn't been a slam dunk at lower levels. From yesterday afternoon itself, we've been seeing recovery, and that recovery actually has been led by individual stocks in the mid-cap end of things, which have seen a sharp drubbing itself. All things speak about silver linings in the market. Yes, at the top of our heads, we have the Nifty Sensex marginally in the red, the Nifty bank outperforming. But Nigel, all is not lost. We are in the process of bottom formation.
Well, that's right. You know, Manglam, the call this morning was that Nifty as it is underperformed. You know, so in these sort of situations, it's not such a bad thing to be an underperformer. Otherwise, you're top of the pops and there's every reason to see some selling. But today, you know, as it is, you've underperformed the globe, you've underperformed the emerging market basket. And that's why valuations have become more palatable. And in addition to that, I think a very, very important, point from an India perspective is crude oil prices. That's cooled off to $71 per barrel, which is a big macro tailwind. So put all this together, the screen is looking better, not out of the woods, but yet I think the 21,800 mark, if that gets held out, you want some kinds of consolidation. And then, in fact, you can gradually see a recovery. So some consolidation, that will be the first call, and hopefully then a pullback. Take
that point entirely, Nigel. You know, on Brent, as well as the other thing, which was the dollar index, which fell below that 107 mark as well, 106.5. So you have double tailwind, so to say, for the markets. Compelling valuations, favorable macros, hopefully. Let's see where it goes.
All right, let's get in Shilpa route then. Hi, Shilpa. Good morning. Good to see you, Ben. Shilpa, what's your take on the markets? Everyone's talking about this near-term band of around 21,800 on the downside, and on the upside, it's anything between 22,350 to around 22,500. What's your take? The Nifty is still down 50 points. Buy the dip?
Yeah, good morning, Nigel and Manglam, and thank you for having me on the show. We have been talking about 21,800 based on technical levels, that it is a 50 WEMA, and in any falling market, usually the 50 WEMA holds a very crucial pivotal level where you see some sort of bottoming out happening on temporary basis. So 21,800 definitely looks like a very a strong support, and everybody's eyeing on there. If it holds, then we might see some sort of recovery happening towards 22,000 to 22,200 levels. And if that so happens, then eventually we might see some sort of stability in the market. Likewise, Bank Nifty 48,000 continues to be support, and it is holding on well. The put writers have the strong conviction out there. So as long as we are holding 48,000 mark, we should see some sort of respite, and the move towards 49,500 to 50,000 can happen then.
All right, we'll take that point on board. Just keep an eye on a bunch of stocks which are spiking right now. Alembic Pharma at the high point of trade. HPCL is at the high point of trade as well. We are seeing some traction in names like Geo Financial Services, Nykaa, Laurus Labs. All of them are doing well at the high point of this morning. The broader market's actually looking in much better fettle. Though the tug of war around tariffs continues, we have some news coming in from Bloomberg saying that China will impose up to 15% tariffs on goods from US. It is the season of retaliatory tariffs. China will levy tariffs on some US products, which include the likes of chicken as well as soybean. So we'll keep an eye out on this as it progresses, largely because we have tariffs, we have retaliatory tariffs. There's China, there's Mexico, there's Canada. All of that is happening.
You know, Manglam, one fear was they expected Trump to go hard out at China.
Yeah.
And suddenly we are not hearing about that. So, with this sort of tariffs and counter tariffs, between them, it's okay. Hopefully, we are saved a little bit. But, the hope is that Trump is quite strict with China, and then it makes sentiment a little bit positive, and hopefully we have better bargaining power.
Take that point completely. But let's talk about bargains in the market itself. Individual stocks. Shilpa, what do you have on your list?
I have two buys. The first one would be a buy in Scient. Scient is looking very strong. If you look at the option chain, you would understand that 1200 we have very strong support out there, very strong high conviction by put writers. So that becomes the stop loss. So 1200 should be the stop loss, and a little positional trade from here. Levels of 1400 can come as well. So one is Scient. The second one would be Hindalco. Hindalco is holding very well at around 640 zones. So the stop loss would be here 620. As long as we are holding above 620, we are good to see levels of 680 to 700 zones.
Okay, all right. Thanks a lot for that, Shilpa. Well, I think on that note, I think we can move on, get you some ideas of profit. That's our special segment, as always, from Money Control Pro. Khushbu joins in to tell us about a stock that she's tracking closely. Khushbu, take it away.
In today's idea for profit, we have Chola Mandalam Investment and Finance. Chola has a diversified business model with a strong focus on rural-centric retail customers. If we look at the recent company's performance, the asset growth was ahead of guidance, but the asset quality saw some pressure due to seasonality and challenging macros. The company will be investing in incubating newer businesses, technology, and branch addition that will drive growth in the coming period. The capacity utilization, which was subdued during H1, has seen signs of improvement, and the asset growth is expected to continue to surpass guidance in FY25. Net interest margin will likely improve in a declining interest rate environment, which will help to improve the core business margin. Moreover, the business is shifting towards the high-yield product mix, which will help the company to sustain healthy profitability, while the low credit cost of the mortgage portfolio and improved collection in the vehicle finance will support the overall asset quality. Though the valuation is a bit higher than the industry average, it is justified given the better quality of the earnings.
Right, with that, we'll take a short break. On the other side, Ravi Jakhar, who is the Chief Strategy Officer of the Allcargo Group, joins in to discuss the group's business outlook at large. Stay with us. Welcome back. Even as the market continues to move around, we have Voltas, which has moved higher. Now look at Blue Star. Blue Star is a stock which actually had seen not much of a correction of its 52-week high. It was down just about 8-9%. And from today's low itself, it's recovered about 11 odd percent. It's currently sitting with a gain of 8%. So a bunch of stocks in the broader markets doing a lot better, seeing purchases. And if you look at the advanced decline chart, that tells you the story of the day. 1,800 stocks now advancing for just about 773 stocks which are declining. So even as the frontline indices are marginally in the red, portfolios would be feeling slightly better after the drubbing that we've seen very, very recently. In that, let's talk about one of the business groups. That's the Allcargo Group. Ravi Jakhar, who's the Chief Strategy Officer, now joins in to discuss the company's outlook for the very near future, the medium and long term itself. Thanks a lot, Ravi, for joining in. Always a pleasure speaking with you. We have the update that has come in from your businesses, Allcargo Logistics, Gati, as well as Allcargo Terminals too, for the month of January. The question is, what is your volume growth prognosis for the full year when it comes to all these three businesses, and what are you targeting for FY26?
Thanks. It's always a pleasure being on your show. So let me start with the domestic business on India's side, which is contract logistics and express business under Allcargo Gati. On the contract logistics, we are now tracking at more than 40 to 50% growth year on year, and we see the momentum continuing. We have done extremely well in some of the new segments that we have gotten, such as quick commerce, warehouse management initiatives. On the express business, for the month of January, like you mentioned, we started with the growth over the last year. And we believe that the domestic consumption, the rural economy has started to do well, and now that should have an impact on the urban economy. And the overall distribution of goods across the country should increase, which means that express industry should outperform the last 2-3 year average, which has been hovering at about 9%. And we are confident that we would beat the market growth rate. So I remain confident of a double-digit growth rate as far as the domestic express business is concerned. On the terminal side, we continue to do well on the CFS business. We have a new ICD coming up in NCR as well, but that won't be operational soon. It would take more than a year for that large project to come in. For now, the CFSs continue to run close to capacity, and we expect it to be again close to a double-digit growth for the year 2026. On the international business, we started the year with 9% growth in FCL and about 4 to 5% growth in LCL, which for a global business is quite good. We believe that given the whole international geopolitical and economic outlook, the next 3 to 6 months may remain subdued. However, we do expect pickup from mid-year, say after 3 to 4 months, and the volumes should expand beyond that. Personally, I believe that more than the US tariffs, it's the war in Europe that would have a far more bearing on the trade outlook, because that could revive some of the European economies on the back of Ukraine reconstruction. And so there are a lot of factors at play, but I believe that on the international trade, as well as on the domestic side, across businesses, we would continue to outperform the market growth rates, and therefore I remain confident about a good growth in the year.
All right. Hi, Ravi. Good morning and good to see you in. What's the targeted margins for the Allcargo logistics business? I see at the 9-month mark, you're doing closer on 4.3% odd. Scope to improve further, or will it be in this vicinity?
Yeah, so I would say, one should look at the international and the domestic businesses separately. As you know, we are going through a scheme of rearrangement. About 2 weeks ago, we finally got shareholders' approval with an overwhelming majority, I think 97 or 99%, something like that, which was in the NCLT convened shareholders meeting. And now it's the final procedural steps which remain. So in the next about 2 to 3 months, we should see the international business listed separately and the domestic businesses all combining, eliminating all the subsidiary structures. So from a profit margin perspective, I would say, a like-to-like comparison could be difficult, but structurally on the international business, I would say, next couple of quarters could be more flat, but then we should see an upward movement on account of either the trade improvement, and even if that was to not come through, our own internal initiatives should help us improve on the margin side. On the domestic side, it's an operating leverage play. As we continue to grow and expand, margins should continually improve. That has been the trend for the last almost 3 quarters now, and the same trend should continue as the operating leverage should continue to play out.
So if you could give us some qualitative comment on the domestic margins itself, because I'm looking at Allcargo Gati, EBITDA for the first 9 months have increased by about 53%, with the third quarter EBITDA actually having tripled. What's the targeted margin for Gati as operating leverage increases? And if you could also give us a sense on what you're targeting when it comes to your revenue mix for the domestic business in terms of air volume, contract logistics, and express logistics.
So air volumes would remain about 5 to 7%, while the surface express would remain at about 95% as far as the domestic business is concerned. Contract logistics is not a volume business. It is about 6 to 7 million square feet of warehousing space that we manage. And we believe that it could be a low double-digit growth on the express business, while it could be a 20% plus growth rate on the contract logistics business on the top line. In terms of margins, like I said, the SG&A would be more inflationary increases, and therefore an operating leverage should play out, and we should see a continued improvement on both the absolute numbers as well as the percentages as far as the express logistics business is concerned.
Are you looking at double-digit margins anytime soon in the express logistics business?
That would possibly take a bit longer, considering the operating leverage and the near double-digit growth rate. I think that would take some time to play out.
Right. Do you have any, M&A plan in the very near future? Because you've always been acquisitive in nature, and even in the third quarter end, we saw you further increase your investments in a couple of the companies that you had earlier acquired. So is there any specific area where you're in talks and something that we can hear very soon?
So we are not looking at any acquisitions at this point in time. If you observe our long-term strategy, we were in a phase of acquisition to build out the positions in markets or segments where we were not present. That has all been completed. What you hear of now could be marginal, increases in existing joint ventures, which is very small. In terms of the business segments and geographic presence, we are well covered. We have all that we wanted. From a restructuring perspective, the 2 companies were already demerged and listed independently last year. And like I said, in the next 3 months, that will also get completed. And therefore, we come to the final terminal phase of restructuring. the focus right now is primarily on organic growth and, as we call it, internal consolidation, trying to see how we could, particularly in the international business, how we could continue to, leverage cost synergies, how we could look at, using the one global financial system to move certain functions into low-cost economies. How can we automate the operations? So the entire focus is around use of technology and bringing in greater cost efficiencies across the business. On the domestic side, it is, of course, on the back of buoyancy on the Indian economy. We believe that we would be beneficiaries from that. Any manufacturing-led economic growth has always been led by logistics, and we believe that next 5 to 10 years would continue to provide a great opportunity, and therefore the intent is more commercial revenue focused while maintaining the cost. On the international side, as long as the trade outlook remains subdued, our focus is on internal consolidation, trying to see how we could optimize costs and improve margins.
Take that point, Ravi. Always a pleasure speaking with you. And I think the street likes what you're saying with regards to double-digit growth and maybe the worst being behind for express logistics as well, even as there are some pressures in the international business for the next couple of quarters. Look at the intraday chart of, say, something like an Allcargo Logistics or Allcargo Gati as well. You will see some bit of a recovery in the stocks from the lows. So Allcargo Gati is now at the high point of trade. And we also have Allcargo Logistics, which has seen a bit of recovery from the lows itself. With that, what we'll do is take a short break. But as we do that, here's some good news coming in for all you viewers. It's India's business news leader, which is now a click away. That's the CNBC-TV18 app, the all-new CNBC-TV18 app, which gives you access to breaking news, in-depth article, and all financial world updates at your fingertips. You can download the app from your Apple Store or Google Play Store, or just scan that QR code, which is up for you on the screen, which will redirect you to the link that takes you to the all-new CNBC-TV18 app.
Welcome back. Well, the markets have seen a good recovery. The Nifty is now down only around 40 points. Remember, we started with a cut of around 150 points. So that's a good recovery is what we've seen. The Nifty Bank is trading well in the green, and the breadth of the market is heartening. Now you have 1,800 stocks that are advancing, which indicates that the breadth of the market is firmly in favor of the number of stocks advancing more than 2:1. At the start of trade, you had way more number of stocks that were declining. Well, time to wrap up on this edition of Chartbusters. As we do that, here's a quick note for our viewers. What does it take to move the needle on gender parity? The biggest names in the business, policy and leadership come together at the Mega Summit where HSBC presents CNBC TV18 Future Female Forward, co-presented by Cognizant. To answer that, tune in live on CNBC TV18 10th of March at 5:30 p.m. We bring you insights from those shaping the future.